My name is Bill Staniford. I am the former CEO of a company called Property Shark. I'm not sure how many are aware of that company. We were one of the first real estate data aggregators here in New York City. I also have a background in Marine Corps intelligence. I was a cryptologist and a code breaker.
Michael. Keep speaking. No. Maybe.
Oh, cloud.
There you go.
So my background is nothing like yours. I wish it was more like yours. So Michael Beckerman, I formerly was in the public relations side of the industry. I built my own PR firm over about 25, 30 years, wound up selling it, got into tech about 5, 6 years ago. Mostly on the commercial side, so my sites are the news funnel. You probably get tons of annoying emails from us. The news funnel, yes, some guy's going, yes, 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 stop. Real estate tech news, and most recently, crvtech.com. So my whole world is about connecting the real estate sector and the tech sector, mostly on the startup side.
Great. Dave Knowles.
Can you hear me?
Yeah.
I'm David Knowles. I was a real estate investment banker my whole career, and starting with the creation of the CMBS market when I was at Salomon Brothers, and then I was at Merrill Lynch, where we created a lot of the big RIATs. And my interest in blockchain is really we can talk about this in the panel perhaps, is a record-keeping mechanism that really ultimately can be the vehicle that will allow, as Ragnar often puts it, for real estate to trade like stocks. And we'll see if that happens, but that's my mission in mind.
Josh.
I'm Josh Panknin. I'm the Associate Director of the Center for Urban Real Estate at Columbia, and adjunct professor. We focus on teaching real estate tech, the integration of real estate and tech classes to our students. We think it's important that as these students come out of school with a real estate background, they also have a tech background, so they can start to be translators as companies innovate within technology. I was in real estate for about 12 years, acquisitions, research, most recently trading CMBS at Deutsche Bank. I was there after the Big Short was filmed, so it's not my fault.
Perfect. Can everyone hear them okay? Okay. What's that? Louder? A little louder. Okay. Make sure your microphones are kind of close up if they're down. So Michael, I'm going to start with you just because you have to run soon. So you work with a lot of startups. So what makes a good startup and a bad startup from what you're seeing? Let's start with that.
Well, that's a tough one. I wish I knew. I'd invest more. Well, I think not to avoid the question, right? It's a good one, but I think we're at a very interesting time in the sort of the startup world, which is where sort of like I focus on, in the sense that I've been in that category for about 5, 6 years, and I think there's 3 sort of main trends to just sort of that I pay attention to right now. One is it's getting increasingly hard to raise money as a startup. I think that the recent stats that I've looked at is that funding is down, and the startups that I talk to, it's more challenging, I think, than ever to get funding. Having said that, I think the second thing that I pay attention to right now is the fact that because it's more challenging in this environment, both in terms of funding and getting traction, I think we're going to enter an era of rapid consolidation in the space. So I think you're starting to see not just M&A like the VTS and the Hightower, but I think just smaller sites being gobbled up for their technology and their talent. So I think we're definitely seeing that. And then I think the third thing that's very interesting that I pay a lot of attention to is that the large multinational brokerage firms, in particular on the commercial side, and in coming along as well is on the ownership side, are starting to invest. And I think that's a very interesting sort of paradigm shift in the sector, because they have the resources, the user base to incubate a lot of technology and then to very aggressively scale it. And so I think what I'm starting to see is sort of almost like an arms race between the major brokerage firms, and the fact that they're all sort of starting to think about investing in their own proprietary technology or make acquisitions. And I think the combination of those factors is going to really sort of change the environment in the startup world in the next, say, 12 to 24 months.
So harder to raise money, you have these larger companies who are incubating. It's kind of a bipolar type of deal. You bring up a good point, so I'm going to ask David a question because it leads into something that him and I have talked about. So David, what challenges do you see for, there's blockchain startups here, and they want to go out and raise traditional money, traditional VC. From your experience, what challenges do they face with these incumbents, who we won't name, funding blockchain startups, if any?
Well, I think there's less track record so far in blockchain. It's an emerging area, but I think, to maybe not directly answer your question, the biggest challenge that I've seen in this whole area of real estate tech is putting the cultures together. The culture of real estate, the culture of technology couldn't be further apart. And, getting the real estate backward, antiquated mindset to realize that technology is going to change. It's already changed every world except for real estate, particularly commercial real estate. Get that mindset to merge with the technology people who are brilliant, but they don't understand the domain. They don't understand the peculiarities of the commercial real estate business, which is the largest real estate capital market in the world. Putting those cultures together, to me, has been the real impediment. And the venture capital world and some of the strategic investors are starting to realize there's got to be a merger of these mindsets, and I think when it happens, this is going to be huge.
Yeah, culture is a big thing. It's two different worlds, but like Michael said, there are some differences. Michael, I'm going to ask you one more question, and then I'll let you go, and then I'll ask the other guys. So you work with, you talk with a lot of companies, a lot of big guys. So, they're trying to understand blockchain. What problems are they talking about that they want solved? So the blockchain entrepreneurs in the room know what I focus on. Because I found a lot of the engineers, they're good at engineering, but not solving a business problem. So what are the big problems that people you talk to are trying to solve with technology?
That's a great question. I think as David said, I think, the fact that when I was in the public relations side of the business, my clients were only real estate developers, brokerage firms. So that was my category. So I know sort of the beast pretty well. And now in the tech sector, it's a lot of entrepreneurs, first-time entrepreneurs, and people that don't really have that much experience in real estate. So, when I think about like this intersection of technology and real estate, and what's gaining traction and what's not, and what are the pain points, and what the resistance is, I think that a lot of it, people think that it's either inertia, or it's ignorance, or it's a lack of understanding or comfort in technology. I don't think it's any of that. I just think it's that if you look at the nature of the beast, it's eat what we kill, right? Mm-hmm. And so I think the startups that have gained traction are the ones that get professionals and companies closer to the transaction faster, without friction, right? So I think what they're all looking for are tools that can help them, close transactions, source transactions, close them, analytics faster, and then obviously make money faster and get paid quicker as a result. So I think that's still one of the great sort of challenges that has not been, successfully built. We talk about like the startup world. Well, when I go around the country and talk to different groups, when you're outside of New York and maybe San Francisco and LA, and you start talking technology, there's like no adoption. It's in these markets and it's still small. So I think those that come out with something that can help facilitate deals, transactions, and communication faster will be the ones that will ultimately win.
Exactly, the transactions, because that's ultimately where the money is generated for a lot of these guys. And there's so much friction, there's so many intermediaries there. And, a lot of people talk about title for blockchain, but we have programmable money. Cryptocurrency is programmable money, whether it's Bitcoin or Ether or something else. There's a lot of money that can be freed up by getting closing deals faster, less friction, all that kind of stuff. So I'm actually surprised there's not more startups focusing on that. I think maybe it's because in the past, you know, the currency thing was weird for some people. Like, oh, Bitcoin, I don't like that, but I like the ledger. That's backwards. But anyways, thank you for that. If you need to run, you can, but you can stick out as long as you want. Bill, I'm gonna go to you next. So, you know, David talked about, okay, or a couple of people talked about, it's challenging to raise money. You have a different culture differences. So ICOs, let's talk about that.
Well, first, you know, if I may, I think I have to disagree a little bit with almost everything that's been said.
All right, this is good.
Which is interesting.
Perfect timing, you got your exit.
You know, I just think that, you know, first of all, we have, you know, obviously we have Metaprop that's willing to write checks. They actually raised more than they expected. We have Fifth Wall that just raised over $200 million specifically to allocate funds to real estate technology. My most recent startup company, we raised money faster than I've ever seen possible. I mean, we actually closed within 3 weeks. And basically what I'm seeing is, if you have the management team, I think you can raise money incredibly rapidly. One of the things that was said is there's a lot of startup companies coming out there with people that don't have experience. They may be good technologists, but they don't know blank about real estate, which is one of the problems that I really see, because, you know, again, someone also mentioned that, you know, there are these owners that are coming in. Rudin is actually using their resources to create this interesting building management software that they can use internally called Nantum. You have Tishman Spire that's creating their own company called Zoe. And then, I mean, there's so much activity in this space, but I do think people there is this, it's a little tiring to see these new startup companies popping up all the time saying, hey, I've got this new product to sell. Hey, I've got this new product to sell. And all of these brokers, and I don't care whether you're talking about the residential brokers, the Corcoran, the Element, or the commercial brokers, the Cushwake, you know, they don't have the time to be meeting with all of these little startup companies to talk about their new little product. And that's a challenge that I see coming out in this industry. But, you know, I think there's a lot of money out there. I think the business models need to get better. You know, let's go back to, there's really 3 main areas of disruption that needs to occur. One people talked about is making the transaction more seamless, right? Another area is maximizing the assets, right? So if you can get more out of your rent roll, if you can get more out of your garage, I'm seeing a lot of that. And then finally, the disintermediation. How can we get rid of the brokers themselves, which, again, if there's a company that's like that, you get a lot of pushback from the industry. And so you have to tiptoe around that space as well.
Great. I'm going to revisit the ICO question to you, so I didn't let you go, because I know you have an opinion on it. Josh, so you're at Columbia working with Metaprop. Are you seeing any blockchain startups there? What are you seeing in terms of what you guys, when you're talking to the students, maybe tell what you guys are doing over there, and what's the opinion of Metaprop of your students looking at blockchain and real estate together?
Sure, so we did have one, Zach Aarons from Metaprop, and I co-taught a class at Columbia in the summer called Hacking for Real Estate Tech. And the idea was to bring technology into the real estate curriculum. So it was kind of an entrepreneurship class with real estate and tech with it in there. We had one team that had an idea to start blockchain. And there were students, they didn't have any experience on blockchain when they came into it, so the idea, as Bill talked to them, probably doesn't have many legs, but the point was that these kids are starting to think about it. They're starting to bring that mainstream academics.
Can't hear you. We should speak loud, maybe.
There you go. There we go. So this is starting to become more mainstream. But really what we're trying to do is get as these guys have said, bridge the tech with the real estate. As you get more and more complex in the real estate industry, building technology for that becomes more and more complex. So we sat back and we said, why have certain companies been able to be successful in innovation, whether it's in real estate or outside of it? And when you see the companies that have been successful, the organizations that have been successful consistently, they do that by forming cross-disciplinary teams who have people in a lot of different sectors come together and build these products. And many of the tech startups that we're seeing come out are tech people that try to jump into the real estate industry, or real estate people that try to jump into the tech industry. And both sides think the other side is very easy, and they soon realize that that's not the case. So the companies that have been successful, like BTS, Floor, they've been people that knew the industry, knew the business, and they created technology to do a specific purpose, to suit a specific purpose for what they did every day. So we're trying to get these kids to understand that bridging that gap between the real estate, the technology, and the approach to bringing those two together and communicate is the most important part of the process.
Yeah, bringing the real estate and the tech worlds together, that's hard. And then bringing those people to the busy, big guys who you said they're busy, they don't have time for every little startup. And that's part of what we're trying to do at iBray, is bring together the entrepreneurs, the investors, the technologists, everyone, because that's how it works, bring together the big real estate owners. So Bill, ICOs. So for the blockchain startups, I know there's a few of us, two are going to present, there's 2 or 3 more in the audience. They're looking at doing an ICO, they're thinking about it. Velox has a token. What do you think about that?
Well, so again, in my mind right now, ICOs are simply a way to raise money. Now, I'm not a purist. I'm not a blockchain purist. I'm not interested in protocol development right now. I mean, I know when we saw that on the graph that protocol coins are the largest ones. That obviously is not going to be real estate technology. Real estate technology is not going to be building protocol tokens. Okay, so what are we talking about when, I mean, this, we want as a real estate tech community, the adoption of blockchain technologies. And so again, I feel that it may be a little premature for ICOs in real estate tech, but not too far off. And what I'm most concerned about is the regulation. Anyone that's doing an ICO, I want to make sure that I will only be a part of an ICO that gives legal recourse to the people that are purchasing these tokens. So I need to make sure that these coins are legally enforceable within the United States of America. That's where I am. And so, you know, I think the jury is out on the ICOs. Anyone that's doing an ICO is very brave. And I do, like, so Ragnar and I have been talking a lot about Velox. And again, so this is, I believe that the holy grail of real estate technology is what's called the unique identifier, where you can say, and someone brought it up earlier about what 3 names. The problem with what 3 names is it identifies a space of property, right? So when you're talking about vertical cities, and there are individuals like condominium units that they would cover the same space as what 3 words. So that's not going to work in vertical cities, and that doesn't work very well in New York City. I think the blockchain is going to be critical in the creation, finally, of a unique identifier. And this issue, just to put it in perspective, there's been a property unique identifier work group in existence for over 3 years now with CoreLogic, Black Knight, and Zillow, 3 multi-billion-dollar companies, and they are not even close to solving this problem. And I believe the blockchain is going to be the critical element to solve the unique identifiers finally.
So, good statement. So, unique identifier solved by blockchain. I agree with you for several reasons, which don't have time to talk about that. You know, let's go to some questions because we're at 12:05. So let's go to some questions right now to ask anyone. So Leslie's going to come over and she'll man the microphones. So we'll do questions for about 5 minutes or so, and then after that we'll break. We'll have the startups we're going to present come up. So if there's any question.
So I have 2 questions. The first is about, in terms of disintermediation, how do you get around the consensus building situation? So basically, if you want to disintermediate the broker, for example, all the players in the market sort of have to agree that there's a new way of doing things at the same time. That's the first question. And the second question is, when it comes to the ICO problem, is how do you create a system where investors are able to do due diligence on a company without having access to any of the information that would normally go into the due diligence process of investing in a startup?
Anyone want to take that?
I can take the first part. I think disintermediation starts with information flow. And real estate is the opposite of the rest of the world. In real estate, often you make money by not disclosing, not providing information. And I think that's the first thing that's starting to slowly change, particularly in the residential area and ultimately in the commercial area. But until information flows more freely and is able to be analyzed the way every other industry is, I think that's step one.
Let me add on to that. So there's a company out there right now called Open Door, right? And I think, who's heard of Open Door? Okay, that needs to be much higher than that. Open Door just raised, I think, over $200 million. Okay, maybe closer to 3 actually. And this is forced disintermediation. So basically, these guys are going out and identifying the areas where AVM, automated valuation models, work best, and then buying the properties and then selling them themselves. They're just knocking out all of the brokers, which is a very cool model, and that's forced disintermediation.
So forced disintermediation, I agree with you on that. So next question.
I am a commercial broker, and I'm looking to be disintermediated. Can you tell me how it's going to happen? And I agree, you had said transactions. My experience, transactions are the beginning of everything we all do in this room. So the commercial broker is the first person to touch the transaction. So we do the kill, everybody else picks up the crumbs. So, but I like what you said about friction. It's all about the less friction, the better. And I sort of feel like a taxi driver right now. Uber is about to come into town. So I just like to know how you disagree.
Who wants to take that one?
I can take it.
All right. I think we'll do one more answer. Whoever wants to answer that one.
I'll answer. So again, I will look at forced disintermediation for you. So there's a couple of companies. The top leading company out there is called Envelope. Envelope right now is looking at, it can basically figure out the envelope of a building. So you can click on the property, it will give you a 3D rendering of what the current building is and what the potentially developable space. It also does assemblages. And so, if that entity decides to start a fund and start going out and purchasing properties, I mean, it's going to know things before the commercial broker does. There's still a possibility that they will use commercial brokers in the process. So, but I would look at, again, I think falling on him is going to be the information flow.
That's a process. Envelope, that process used to take weeks. It can be done in 2 to 3 minutes now for every site in Manhattan. Peterson Fox has something called Urban Interface. They can do about 400,000 iterations of a design of a building in 2 to 3 seconds. That wasn't possible before. So it's taking over. It might be slowly, it might be quickly, but we're starting to automate away little pieces of this industry.
So it won't be industry people getting together and say, let's do this new system. Someone's going to come along and say, use our system, we'll save you money and time. Yeah. And that's all it takes.
And also, let me say, I don't think that the brokers are going to be completely disintermediated, and I don't think that's ever going to happen. I do believe there's going to be a consolidation where the top brokers are going to be doing more.
Let's do one more question, and then we'll switch. I think any final questions? No? Okay. Yeah, one more.
How do you incentivize people to get this information flowing if they don't have it?
So the question was, how do you incentivize them?
I'm a fellow worker who plans to legal these documents stays around.
Well, just speak.
Hi, I'm also a residential broker. How do you incentivize people with this information to help give it up, to make this process a little bit easier when there is no incentive right now?
Well,
I make my
how do
money
you
by holding
incentivize
on to my
So
information
that-
currently. How do we change that?
I'm working on a vlogs.re, so that's all I'm going to say. Do you got anyone else want to answer that one?
I think once people start seeing the value of having information readily available, they'll see that that's more valuable than keeping information private. If you have more information, you can make better decisions, faster decisions, and more accurate, that suit your specific purposes. That becomes more valuable than you collecting that data yourself.
Yeah, I would just add that I couldn't agree more. You took the words out of my mouth and said it much more eloquently, clearly, that the brokers will not be replaced. I feel very strong about that, very passionate about that. I think what is going to happen, though, is that there will be a gap between the highest performing brokers and those that are not performing. And I think technology will be that tool that makes some people just rise to the top. And I think the great change that's coming that's going to sort of facilitate that is that I think all this information is going to get open, right? I think the days of the CoStar monopoly are over, or it's coming, right? And I think therefore when all this information about data, transactions, all it becomes easily accessible, those that embrace technology to speed, efficiency, and things like that will be the ones that will win. But it's coming, because it's all going to be available. I mean, just look what happened on the residential side, which is what you know. That's coming on the commercial side, no doubt.
Yeah, and in terms of blockchain, it's going to be financial incentives, probably blockchain tokens that people incentivized by. I'm going to let you guys go, and then we're going to have the startups come up and present. So.
Okay. Hello, everyone. Greetings from Singapore. My name is Henry Tan. I'm co-founder and CTO of Ragnar. Ragnar is doing tokenization of real estate on blockchain. So today I would like to introduce a project called CrowdVilla. CrowdVilla basically is a shared holiday homes. So it can be in Singapore, it can be in New York, Sao Paulo, Rio, Paris. There are three concerns for property owners. First one is the income generation and the management and the liquidity. In Paris, London, and New York, there is a high percentage of whole unit being rented out. So this is based on the inside Airbnb.com. And with Ethereum, what we can do is the tokenization of the real estate, and basically it will provide security. So we see a short video on CrowdVilla. So there are two types of tokens. The first one is RECP, which is the asset tokens. So basically the value of RECP is backed by the value of the properties, so a portfolio. So, and the second token is RED tokens, which is a derived tokens. And these tokens represent the time sharing facility of the properties. So RED tokens are generated periodically. It could be every year we generate a set of RED tokens that is enough to be utilized in a year. So this is some examples in a mountain house, 1,000 RED tokens per night, beach bungalow, modern cottage, and so on. The person in the middle, the brown one, it has RECP tokens which it can use to transfer or sell to another party. And another option is with the derived tokens, RED tokens, it can use to utilize in the property or otherwise transfer or sell to another party and let another party to utilize it. So now as a property investors, there are options. Either you buy a property through a traditional way, which has the property title, or you buy RECP tokens, which periodically generate the RED tokens, and that itself can be transferred or can be sold to other parties. And the RECP token values is derived by the fund values divided by the token supply. And the fund value is basically the total value of the assets and the digital assets, which means when we have the fund, we not necessarily we complete the purchase of the properties at the same time. So there's still some Ether left, some RED tokens, and also the fiat currency account. So all these concerns are addressed. The RED tokens is tradable, RECP tokens also tradable and liquid, and the property is being managed. Thank you.
Any questions?
Sorry, regulations in Singapore. Okay, for Singapore, from what we have talked with our legal advisors, that the time sharing in Singapore is not regulated. So for this model, it is okay.
Other questions?
What's the status of the enterprise? Did you raise capital, or is it operational? You're still designing focus?
Okay, so we are in the process for creating the regulatories in different jurisdictions, and we are targeting to launch it in the first quarter of next year.
But is the token protocols and app, they are designed already?
Yes.
What about a buyer from the other part of the world? So there are restrictions about US citizen, European citizen, and so on.
Yeah. Okay, so as what other ICOs are doing, they are exclude certain jurisdictions. So we will follow this practice. And for other jurisdictions, we'll do a full KYC.
One more question. Hello?
Your presentation talked about the fund manager. Who is going to be the fund managers? I think I understand this. Let me just make sure. There's a bunch of.
Okay, so the fund managers are the third parties, management companies who is tasked to manage the property. So this is as per current practice. So some properties are being managed by professional companies doing this.
Right, but who's hiring that?
So we as a company, we will hire them, and they are also getting incentives from the tokens.
Oh, they are.
So yeah, hiring.
Yeah.
Or exception.
Sorry, just to clarify your the earlier question, are you offering tokens in the United States or in the European Union? You said you're using other models, but there are lots of different models. So are you offering these tokens in the US or in the European Union?
So for that one, we are working on the details on what are the jurisdictions that we can offer. So as a start, we are targeting places like Singapore, Japan. That's as a start. And while we are working on that to try to expand the jurisdiction, whether the structures allow or not.
Thank you very much. Okay, and the last one before we go to lunch, let's get Blocksquare up really quick.
Hi everyone, my name is Dennis. I'm the CEO of Blocksquare. We were short of time. I wanted to show you some interesting people from the country I come from, Slovenia. But I'll just skip through it. Maybe you know some these guys. Maybe I hope you haven't heard my speech before. So what's the opportunity we're all chasing here? We're here to unlock the value of liquidity premium. Experts estimate that illiquid assets like real estate suffer from a 10 to 30% discount due to illiquidity. If we look at the numbers, we can, global real estate is estimated to roughly above 200 trillion. Of that, about a quarter represents commercial real estate. Now, if we were to unlock 10% of that value, that would be about 5 trillion. Now, that's a market that's not there already, but we can see it. So that's about 40 to 50 times the current cryptocurrency capitalization, if we look at all the cryptocurrencies around. So the question is, how do we get there? The solution we propose is a network of tokenized real estate and a platform so users can buy or sell real estate and earn from collected rent. The network will allow real estate professionals to sell commercial real estate in a tokenized fashion. So what is Blocksquare? It's, like we said, it's a network of tokenized real estate. It has a protocol that links those assets to land registries, current land registries. And it's also a platform so users can interact with different users within the commercial real estate industry. And it also offers a decentralized exchange so owners of property tokens can trade those tokens. And that makes the assets underneath liquid. We could say that Blocksquare is actually the Ethereum of commercial real estate. So the first problem that we came up with, we found, is trust. Trust is a big issue over the internet. So we needed to develop a protocol to link those smart contracts representing properties with current land registry. And we needed to do it in a decentralized and trustworthy fashion. So we developed the proof of title protocol. You can find details on that in our technical paper online on our webpage. So what's next for Blocksquare? We developed and tested prop token smart contracts. We've created a proof of title protocol and started implementing our decentralized exchange using the 0x project. Maybe some of you have heard of it. Not sure. So our pilot project is being done with a partner company in Slovenia. It's roughly 10 million worth, about 14 units, and is going to be finished around April 2018. But the actual sale of the tokens is expected at the end of this year. So while we're busy working on that, the Blocksquare token presale will start on our website in about 2 weeks' time. As opposed to many ICOs around there, we're not doing a single stage sale. We're actually doing a multi-level one. In our presale, we're gonna distribute 10% of our tokens and then in exchange for $1 million, and then when we develop further, we'll launch a Series A crowd sale. So having reached to the end of my presentation, I wanted to point out that we're eager to connect with real estate professionals, advisors, promoters, to help us grow Blocksquare into the first decentralized and automated real estate network for commercial real estate. Thank you very much.
Very good. Questions? Over there. Leslie will take over the passing of the baton.
I've read your white paper and there's some good information in there, but one of the questions that still lingers is how you're managing the fact that your token is a security and will need to be regulated. What are you doing to mitigate that or to address that?
Our token, platform token, is not going to be a security, but there's this prop token contracts representing each property that we will need to point into a different direction. We actually, the prop token contracts will issue tokens representing rights to use that property. So in a time share variable, that will incentivize not to use the time share. So that's.
The question you mentioned about the land registry. Can you talk a little bit about that, how you're integrated with the registry and what the implication is that for the transfer of the property?
Excuse me, maybe I didn't understand it.
Yeah, so you mentioned integration with a land registry or land registries. Can you talk about that protocol and what the implication would be for things?
So we're not integrating into land registries. We're just using it as a trusted source of data. And the actual property is owned by an escrow company that holds title on behalf of the token holders. So basically, it's impossible to do it right now because the dynamics of blockchain and the dynamics of land registries are just not aligned. I mean, it's a very static system, and on the other hand, you have this tokenized system which is very dynamic. So you need to make sure that the legal structure of the title is tied down, or how to say, is blocked so nobody can do a sale off-chain. And then the layer on top of it, which is a blockchain layer on the Ethereum blockchain, it allows for these tokens to
The transfer isn't recognized by the registry. How can you offer that to the investor?
Well, there's many cases where I don't know, SPVs or other companies hold title on behalf of the actual investor, aren't there? So.
One more question. One more question.
Hi. Is the value of the token attached to the profit of the project you will do, like the one you showed? I mean,
sorry, is the value of the token?
Of the token attached to some profit, some percentage of the profit from the project? Or it's only like adoption value?
Okay, so there's this platform token, BST token, which will incentivize and reward early adopters of the platform. You will be able to buy into prop tokens, investing in Ethereum, and receiving back prop tokens. and this BST token will be used to distribute the generated rent. So on the long term, you have a pool of users that's incentivized to hold BST tokens on their accounts. And on the other hand, you have properties that are generating revenue and bringing fresh fiat into the system. So the whole network should grow in value. That's our estimates.
Great. Great presentation. Let's give him a round of applause.